Welcome to Property Focus, I'm James Mitchell. Making headlines this week, supply shortages should be on every investor's checklist when hunting for a hotspot, and rising rental yields look to encourage investors in 2012. But first, to our lead story. Smart Property Investment's inaugural Fast 50 report, on newsstands now, has flagged the top growth areas for 2012 and beyond. For investors looking to capitalise on these emerging local economies, it is important to track population growth and other key fundamental growth drivers, Resi Chief Executive Lisa Montgomery said. Speaking to Smart Property Investment, Ms Montgomery said that investors need to look for areas that are attracting new dwellers and are supported by multiple industries.
I think that if you're looking at the growth drivers in that area, is it an area that population growth is happening? Are families moving to that area? Are singles moving to that area? Is it driven by, is the economy in that area driven by one or more industries? You would hope that it would have, a couple of industries supporting it rather than just one single industry, which is sometimes a little bit risky.
However, while the existence of multiple industries is important, the fundamentals of supply and demand must not be ignored. A hotspot suburb will have constricted supply of and high demand for residential property, according to propertybuyer Managing Director Rich Harvey.
For investors, it's about getting the right area that's going to suit their profile. So I would just go back to fundamentals. Buy in areas of high demand, low supply. Wherever there's a constriction in supply, that's the area you've got to buy in. Places that are blue chip, that have got great transport, great shops, great schools. It's also going to come down to affordability, buying in areas where you buy at the right price point, so there's opportunity to move upwards.
The RP Data Rismark Home Value Index, released at the end of last year, showed home values in the capital cities fell 4% in the 10 months to October of 2011, while the dollar value of rents has been rising at a 4 to 5% pace over the course of that year. This has seen rental yields rising steadily and will encourage investors moving into 2012. RP Data Senior Research Analyst Cameron Cusher said.
We have seen in a number of areas that rental yields have been increasing because values are falling and rents are rising, and should that continue, I think we'll start to see some more investors active. But as I said, it won't be investors seeking capital growth, it'll be those looking for positively geared properties. And
don't forget that the flagship issue of Smart Property Investment is now on newsstands. Pick up a copy today to uncover where to invest in 2012 with our Fast 50 report. Our panel of hotspotting experts have handpicked the fastest growing locations across Australia. That's what's making headlines this week. I'm James Mitchell. Thanks for joining us.